Happy New Year's, everyone. Welcome to my first video of 2025. And for this video, I'm going to do something a little different from my usual $100,000 to $500,000 portfolio unveil. Instead, I'm going to be talking about what I plan to do in 2025 to restructure my portfolio in order to maximize more profits and minimize gains. So before we get started, I just want to give a quick update on how we're doing with our swing trades. So those of you who follow me regularly know that a portion of my portfolio is dedicated to swing trades. I haven't posted a video for the last week and a half, but we have been making wins since about uh, December 18th, which was the last time I made a video. BBAI two times, made about 16% first time, it's 9% the second time. Serve Robotics, we made about 15% gain on that. GXAI 8%, JNVR 7%, and currently I'm still in the middle of a swing for for Best Buy and BBAI. So those of you who are interested in following me for my swing trades, you can join my Patreon, which has access to my Discord, where I'll be updating you regularly in terms of the swing trades that I'm in, what price I'm getting in, how heavy I'm going in them, and whatnot. But yeah, just wanted to show you that before we get started. All right, so now to the main course of this video. So my portfolio is now up to $184,000. This is not because I made a huge gain during this huge downturn of the market that we've had during this Christmas break. It's because it's January 1st, and as a Canadian, I remember to contribute my $7,000 into my TFSA. So I put $7,000 in cash, as you can see right on the screen, in my cash account, and now I'm up to about 184, $185,000. All right. So aside from just picking the right stocks and the stocks that you pick just increasing in value and making monies like that, another way to make money in your portfolio is to get rid of your losses. Okay, so like everybody else out there, I have my losses as well, particularly in my TFSA, because those of you guys who know, I only use my TFSA for monthly dividend stocks. I don't touch them for tax purposes. CRA will consider you doing a business if you actively manage your TFSA, and they will tax you on that if they believe that that's what you're doing. So, in order to abide to a non-business, I don't touch my TFSA that often, and as a result of being passive, there's going to be major losers in your portfolio as well. So, let's actually look through some of the losers that I have. So, in my TFSA, my three biggest losers are Happy Tea. All right. I've invested $56,000 and it's down 11%, which is about $6,500. My second biggest loss would be RS, which is Real Estate Split Corporation. I've invested about $16,000 and I'm at a $1,000 loss. And the third one that's at a loss is UTES, which is Canadian Utilities. I've invested 11,000 and I'm at about a $1,000 loss. So my goal is to get rid of my losses. And I'm going to show you my losses in my TFSA separately from my losses in my non-registered account, just to make this video simpler for you to follow. All right. So the first goal to eliminate losers, and this is another strategy I think people who are managing portfolios need to learn. There's a lot of videos on YouTube that shows you, okay, oh, what stocks to get into and make lots of money. But actually, most of us investors, we have losses, and sometimes it's a bit embarrassing to show your losses on YouTube in front of millions of people that can access it. But I'm all about full transparency, and I actually want to show you how to deal with losses because that's another way to earn money. Because if I were to eviscerate the loss between HPYT, UTES, and RS, I'm saving myself about $8,500. With that $8,500, my portfolio would be up to over $192,000. And that just gets me so much closer to that $200,000. Okay, so aside from just buying stocks that go up, all the time, it's also important to eviscerate your losses. But that's a skill that I think many of us uh, don't get exposed to very often, and I'm going to show you how to do that. Okay, so when you want to eviscerate losses, after identify your losers, you have to figure out the timeline for all of them. HPYT is following 20-year US bonds. This is something that I don't see it correcting very, very, very soon. And we want to compare the timelines between Happy Tea, RS, and UTS. Okay, so based on my knowledge of these stocks and their industries and what's going to happen next 12 years, 12 months, I believe RS is probably going to reverse the quickest. All right. The problem is that RS has been gaining the most. Okay, so if I have $7,000 that I'm going to bring in into my TFSA, I'm going to dollar cost average into one of these three. Okay. The question is, which one do I put it in so that my money goes the furthest? Because if something is down 5% and I have $7,000 worth of ammunition that I can use to dollar cost average, it's best to put it into your biggest loser. All right. RS is a good candidate because it's actually a smaller position. But because my average cost is 12.18 and RS has been going up in the last week. You see that it's been going from about $11.05 to about 11.35, and it's probably going to reverse the fastest. I could actually just pause and passively don't think about RS for the short term and let it actually get to break even on its own. What I should be doing is targeting my biggest loser. So it's not RS. It's probably Happy Tea, which I'm down 11% and $6,500, and UTES. These both are not recovering anytime soon. So for the last day chart on December 31st, RS is basically just trading sideways. It's not going up, it's not going down. But if we look at the weekly chart, it's actually going down, and it's going down even more if I look at the 1 month chart. So between the two, I have a hard decision to make. Both Happy Tea and UTES is going down. Which one do I put into? Well, which one is hurting me the most? I think Happy Tea is hurting me the most. Additionally, between the two, UTES has a better yield. It provides me an 18% yield. Also, I'm not too heavy in it either, right? I'm only 10,000 in, so my loss is much smaller, even though I'm at a 9%. I'm 9% down. I'm only 10%, 11% down. I'm only 2% more down on Happy Tea, but I'm down 6 times more money. So with the $7,000, I'm probably going to be dropping most of that into Happy Tea. Okay. If I Happy Tea has current stock price furthest from my average cost. So if I put my $7,000 into that, that each dollar goes a lot further into bridging the gap between the stock price and my average price. And that's the one that you should be targeting first. I should be targeting Happy Tea, but I may not put the whole $7,000 in. I may put maybe 5,000, 6,000 in, and then I might leave the remaining 1,000, $2,000 maybe to put into UTES, because if UTES goes down a little more tomorrow, then definitely 2,000 will go in there. If it's gonna trade sideways, maybe 1,000, maybe 500, maybe I might even leave it if Happy Tea is bleeding a lot more. Okay, but my goal in 2025 is to get rid of these three losers, because if I get rid of these three losers, then that um, cumulative $8,500 loss that the three of them combined are making for me will get eviscerated, and that will be added to my 184,950 portfolio. All right. Then looking at the non-registered account, let's see my biggest losers here. Looking at these ones, I think my biggest loser is probably Wayfair. Okay. Wayfair and XSU. XSU is small caps. Small caps is supposed to go up with a Trump administration, which we have now, but it's just not moving the direction that we want. It's been outperformed by the S&P 500, even though it's supposed to follow the S&P 500, but it's underperforming compared to it. So it is definitely going to reverse. It's just a matter of time. Okay. Now, again, same strategy applies to this one. The biggest losses that I currently have are the ones I'm going to put into. So My XSU, I'm targeting first because my position is small. And also there's a $3 discrepancy between the stock price and my average cost. The stock price is about $42. It's been going down the last week. Okay, so that's why I would target it first. And also, if I put a little more into this one right now, where it's dropped because of the reverse inverse Santa rally that we've seen, the minor correction that we've been having for the last week, um, and it goes up a little after that because it is a small cap, and with Trump coming in January, this might start going up soon. That XSU is probably the first one that's probably going to reverse. So I've been targeting XXU first. I've already put $1,500 in the last week, and I think I'll probably keep putting it in if I have more Canadian dollars on the side to average this one out. Wayfair is the next bigger loser. I have an average cost of $50.78. Currently, it's trading at $44.34. You always want to learn why your stocks are down, why your losers are being underperforming. Two reasons why Wayfair is down. Number one, because the whole market is down in the last 2 weeks, right? So as you can see, there's been a big drop, um, especially on the 30th, where the market was doing terrible. So that part of the reason why this is down is because of the market being down. But there's another reason, which is Wayfair is a furniture company that heavily relies on tariffs. And with Trump coming in and there's a threat of tariffs going up, that's going to hurt Wayfair as well because they have a lot of sales that they do internationally. So if tariffs are going up, in Canada, China, Europe, Wayfair that gets affected as well. So I'm down 12% in Wayfair because of the tariffs plus the correction. So if I had US dollars to dollar cost average, I'd probably put into Wayfair. But the thing is, there's such a big discrepancy in my Wayfair that I'm actually holding this one to the end. So I'm targeting XSU, and I'm going to be using my US dollars to basically trim down my portfolio. So the next goal that I have in 2025 is I'm going to streamline my portfolio more. I don't want how many positions to have in my non-registered. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. I have 17 positions in my non-registered. My TFSA, which we're just looking at, I have about 9, right? That's about 20. That's about 28. Sorry, that's about 26. And then I have another 2 positions in my margin account, which is 28. That's just way too much. So I'm looking to streamline as well, and I'm going to get rid of the ones as soon as I can. Okay, so Wayfair will be gone as soon as I can get rid of it as a loser. XSU will be down as soon as I get rid of it as a loser. Although I still like small caps, and with the Trump administration, it's going to do well. I just think that that money could be put into something that I firmly believe in, and it's one of my core positions. All right, so that's I'm definitely going to move. All right, so in terms of how I'm going to streamline the non-register account, I have to identify 2 things. One, what are my long-term holdings? I'm definitely not getting rid of my long-term holdings. My long-term holdings are Amazon and Google. These are my 2 that I'm not getting rid of. Okay. So of the 17 stocks I have here, those ones are off the table. Coca-Cola, this is a stock where I like it. It gave me a great dividend, but it is a little down. But I don't mind holding it in the long term either because I don't feel any pressure from Coca-Cola. This is a stock that's been killing it even before I was born. Warren Buffett holds it, so I'm not gonna be worried about Coca-Cola either. This can be considered a core holding until it goes back into green, and then I'll get rid of it. But I don't mind holding it for now. So those 3 are off the table. Microsoft is also off the table as well. It's also one of my core holdings, so I'm not getting rid of that. I'm a little bit down in Microsoft for the first time in a month because of this recent correction, but I'm not getting rid of that. All right, so we're down to now the stocks that are in a swing. Okay, my swing stocks are BBAI, Ethereum, Nvidia, AMD, PayPal, Serve Robotics, and SoFi and Tesla. So these ones, I know they will be gone eventually because I'm swinging them. Okay. Some of them are going to be gone fast. Serve Robotics is going to be gone the quickest. I see this gone in the next 2 or 3 days, maybe by next week. SoFi is gone maybe in 3 months, 4 months. That's my timeline there. PayPal will be for the next year, 2025. I see PayPal having a big year in 2025. It's gone sometime then. Nvidia is going to be gone when the Blackwell chips are out. So Blackwell is being introduced sometime this January, and if all things go well, and we get that hype either before earnings, which is at the end of January as well, or after, because Nvidia does amazing job. I'm getting rid of Nvidia around when it hits 140, 48 to 150. So I have a timeline for that, and then Nvidia is gone. And then AMD is a bit of a longer swing. It's probably going to recover sometime in 2025 because although it's kind of not an industry leader in AI, it is kind of the biggest competitor of Nvidia. And I do see it reversing because this is a value stock. It's at a very good price right now. And once it does reverse, I'll be selling that as well. And I know it's going to reverse because their profits have been growing about 20% quarter after quarter. So this is just a matter of time. So to make things short, I'll be getting rid of Ethereum first. This is not a core holding. I'm down just a little bit, only 3%. My average is 1372. I've already dollar cost average in this a couple of times. Once it hits 1372 and I break even, I'm out of Ethereum. That opens up $2,000. I'll be putting that into the last one I haven't talked about in this one, which is Tesla. All right. So looking at Tesla, my price target is about $500 to $600 on Tesla. And then after hitting a all-time high of 480 just a couple of weeks ago, Tesla has been dropping. It dropped to first from 480 to 460 to 440 to 420. I had an average of about 420, 416 before this current drop is happening. So I'm currently at a bit in the red right now. If it drops from 404, which is the current level it was at before markets closed yesterday, to about 380 and 360, I will be taking the money out of Ethereum to buy more of that. And then if I get up XSU, that's where my next source of Canadian dollars will be used to buy Tesla. If there's a correction that happens not within the time frame of those two stocks, let's say Tesla drops to 300, for example, per share in the next week, and I don't get out of XSU or Ethereum in time, then I will take money that I have saved up in my personal account. I have actually $30,000 to $35,000 that you don't even see on my portfolio. Just it's in my own possession, not in Wealthsimple, which I can put in any time if need be. So that money will be starting to come in if Tesla for some reason drops at a ridiculous good price and I'm not ready for it because these two haven't reversed. So yeah, that's what I'll be doing in 2025. In summary, I'll be getting rid of my losers, keeping my winners. And then I'm not just going to randomly get rid of my losers. There is a plan. Okay. I'm going to be limiting them one by one to streamline my portfolio so that by the end of 2025, I've not only got rid of my losers, but I also have maybe 50% of the holdings that I have right now, the stocks that are the core of my portfolio, the stocks that I believe in the most, the stocks where I feel good about owning for the next year or 2 or 3 or 4 years. And I will bet your bacon that when that happens, my portfolio will be in the 200s and will be moving peachily towards $500,000. All right. So yeah, that's all for this video. If you have any questions, comments that you'd like to make, definitely want to hear from you in my YouTube comments. Please like and subscribe if you've done so, and I will be back soon with another video. Hopefully, a portfolio update when things are going well and this market starts turning. Have a good day. Enjoy your New Year's with family. I'll see you next video.